And now I'm going to switch gears. So now I'm aiming for this SIBI right here, which is actually wrong because we're already at the top end of it. So where could we be going outside of it? 415, yeah, Asia's high. I'm not Asia, London's high right here. 216. Let's go back to ES, which hasn't gotten to the SIBI yet. That's huge. We'll stay on a 30-second chart because that's what we're trading. But yeah, we got in right here. Let's see where we're at by 12:30. It's really in a hurry. Jeez. There we go. Here's our first form of imbalance in the way, or in play, I should say. We just close underneath it. Don't want it to act as an inversion fair value gap. I want to see closure above it now, especially over this candle's high. That would be golden. Turn this into a bullish order block. $10.30 is very crucial. Getting blown up. I'm gonna mute this. Okay, we get a bearish candle here. I want to see if it becomes a swing high or do we pierce it. Okay, there's my question answered. But yeah, no longer concerned with this level here. Price is just running. No PD arrays in the making, it's just running towards liquidity. That's what we're looking for. That was a very abnormal candle. It was an outside range candle. I'm looking at the mean consequent encroachment of its wick. See how we react. We got about 2.5 minutes left remaining until 10:30, which is very solid. You want to see where we're at on a 15-minute basis, which is what we have here on the left, which unfortunately you can only see if I hover my mouse above it. But yeah, I'm using all these concepts on a 1-minute time frame and applying them to a 15-minute time frame. If you're wondering why I'm using the 15-minute, I do this with every single time frame because time is fractal. Every single concept you use is a matter of time and price, and so nothing changes. The only thing that changes is the amount of time that these candles are created. This candle right here is golden. I like how it's pushed price very high. I'm gonna go look at NASDAQ real quick. Yes, very good stuff. See how fast it runs on a 15-minute time frame? Nothing changes. Just it's the same price, just different time. So yeah, I would like to see a fair value gap formed here, but also just push to it. So yeah, I'll leave this 15-minute chart up so you can see how price pushes as we reach into the London high. And yeah, I think it's very crucial to see this visually, not just on one chart. Let's go see what price looks like on a 1-minute chart, because I kind of forgot we're looking at a 30-second chart. So yeah, some PD arrays, but you know, that real entry was very hard to get unless you saw it on a 30-second. So highly recommend going with premium on TradingView, and I'm not selling anything for them. They don't know who I am. I don't know who they are. I know they're a company that gives good chart data, and if you're able to see, you know, your instrument on a 30-second chart, you're gonna have sniper entries if you have a 30-second chart. If you know what you're doing, of course. If you know what you're doing, let me make that very clear. Very, very pristinely clear. But yeah. Alright, so now we're at 10:30. We want to see how we react. If we would close underneath this candle's low, it's not going to be terrible. However, I want to see this BSC never be disrespected. We already have 20 handles net. So what's going through my mind right now is I'm holding for the London high. I'm also thinking about my stop loss and where to place it. In profit, of course. When I got in, my stop loss would have been beneath this candle's low, or this one, depending on how much risk management there was and contracts. But yeah, order block, the low of this order block or the low of the fair value gap pattern would have been perfectly fine, either one. Typically didn't want to see it go past the mean threshold of this order block, so either one really would have worked. Yeah. And now we're gonna hold for the take profit, right? but we also want to pay ourselves. So I kind of want to put, I think this would be most reasonable at 91. And then also we're going to take profit right here at 216 flat. And we want it to go to and through it, so we'll do that. Put a one tick, not one tick, one handle above the London high. Okay. So far in this run up, we had super bullish price action. Now we're getting here and we're starting to see some bearish price action. We have a closure underneath this candle's low, and we have a bearish candle now that's respecting it. And so much like how we were back here, we want to see some pump. Okay, we do touch that BISI. The question is, do we find support here? If we close underneath it, I'm more than likely going to close a trade. But if we get reactions like that, that is golden. It has to stay that way though, because if it doesn't, then it's not true support. See, right now what's going on inside of my mind is I want to see that when it was white candle, pierce up here, but that's overzealous. That's not what you really want. It's too much of a reaction. What's the word for it? It's too far of a stretch. And so what you're really looking for when it comes to these is, does it make a new low? Do we form a swing low? And yeah, so right here kind of be where I want to call it, but I'm going to wait for the end of the closing price because it could just be a wick, especially on this candle right here. This is a bullish order block, so I'm going to give it the chance, especially since we've been in this trade for 13 minutes right now. We're going to give it a chance. It would be like you invest here and you see your money go down and you sell it back and you sell it in a loss before it becomes profit. And you need to allow it to, you need to allow yourself to feel that emotion of fear. You're scared that, dang, I'm losing money and I want to sell back because I can't do this no more. And to be able to weather that and to give it the chance. And that's what I'm doing here. Because right here, I want to take profit. I want to very badly. But there's nothing in price action that tells me, hey, you need to get out of this trade very bad right now. Except for that. I want that to be just right on this candle's low, but we have 4 seconds, 2, 1, and boom, we're out. That's it. We're good. Because that's what it leads to. Now, this might be a rate on liquidity right here. But we're going to leave that for a tape reading journal log. Not for something we're going to risk our money on. In due time, we're going to see that and be like, oh yeah, it's just going to come down and take out this kind of low before we reach right back up. But at the current moment where we're at, I was fine and content with taking profit because now we took one winning trade, one losing trade, and we are up 20 for the day. 20, yeah. So I'm content we took our profit right here. I'll show the executions. Yeah. So one here, so one here. So I'm back for a tiny loss. And then that's 78. So I think we lost like 20 bucks and made back 20 or 40. So yeah, good stuff. Very good stuff. Alright, so now it's consolidating and I have no real like interest in this anymore. If it gets there, it gets there. But it doesn't really matter to me anymore. Right? So and yeah, because like right now I'm getting feelings of FOMO, fear of missing out. I want to see price run up to where I think it's headed, which is that London high. But it only offers about 15 handles, which would be 30 bucks, and I mean the risk to reward just isn't here. There's always more opportunity, and so being able to limit yourself is perfectly fine in these conditions. This week has been very, very mundane and not very liquid in terms of providing good market structure, providing good opportunities, and providing really good liquidity runs in terms of, you know, tape reading and what price is going to do and what it's going to form in the story it has. So when this happens, you really just need to learn how to not do anything, and that's about it. If you can't do that, you can't trade. I've taken 3 trades this week. One was very short on Tuesday, and then the 2 that happened today. So I'm limiting myself with my interactions with the market because I know if things don't go my way, I tend to spool. I tend to spool. And so I'm very content with a $20 win today because that makes me profitable for the week. Yeah. And, you know, you might not think that $10 is a lot, but trust me, like, it's way better than blowing your account. It is. It really is. So with that being said, that's going to be it for today. I'm not going to do anything else. There's nothing else that interests me. Price really has been just pumping. And I really liked at the time to see lower prices, which is why I'm not really too interested in what it's doing now, right? But I'm not going to go against the trend unless there's, you know, opportunity that I think is ample, which you saw at the beginning of this video. And yeah, so here we are. I'm gonna go back to 1 minute time frame. So you wouldn't be able to see this on a 1 minute time frame. Go back to a 30 and it's there. Yeah, even if I wanted to take this trade here, like from 09 to 16.5, it's just not really worth it. We could just tape read it and be okay with that. Like, this is where I would enter, and that's where I would take my profit. My stop loss would have to be all the way down here though, and that's just not a good risk to reward ratio. But yeah, here we are, 1 tick short of the London high. I know I'd be fuming right now if I was still long. Dang, get to my target, man. Get to my target. But you have to control your emotions. You have to facilitate them. And there it would have been. So yeah, I hope you guys enjoyed this one, and I'll see you guys next trade. Safe trading and be safe.